Hello one and all, welcome to another video and hopefully a growing series. Today is Monday the 27th of March, and what I'm going to do is I'm just going to run you through the quantum method married up to the Murray math levels just to see if we can get more of a visual representation rather than just looking at the pictures on the forum. It's always sometimes a little bit easier to do so. So what I'm doing here, before I carry on, just to mention, these are Murray math levels, but they won't have much representation looking back because these are representative for today, and as I mentioned, we are looking back a week. So I just want to try and build up some knowledge for you and understand how it's best going to work. So the idea of the quantum indicator is it will look back over a user-defined period to give you the highs and lows over that period of time. So I currently have mine set to look back to 12 hours. So in the intervening 12 hours, you'll see that these are the new lows over the previous 12 hours. So for every new low, you'll get a box, and for every new high, you'll get a red box. The idea is you enter every single time you see a box and build up a series of trades, so you will be averaging in for most part of it. So you've got to make sure you size it correctly. The absolutely key element to the strategy is your sizing. If you go too big, you'll get too big a drawdown when the position moves against you, and if you go too small, you're not going to make enough profit to make it worthwhile. So it's that very fine balance of making sure you don't over leverage yourself and also making sure you size it correctly. I've got a 5-minute chart here just for representative value. You can also do it in 1 minute, 15, 1 hour, 4 hour, whatever you're comfortable with. It's all depending on your ability to control drawdown and what you like to do with the trade. If you like to be more hands-on or hands-off, it's entirely up to you. But the theory is you enter a position when you see a new box, so you'd be entering a buy here, 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 and then here. So that's 4 trades, as there's 4 boxes. And you can either hold it for a predefined number of pips, or you exit when you see an opposite Q box. So if you're going long, you'll be going long on the blue boxes, and you'd want to exit on the first red box. So that was Monday the 20th of March. If we just scroll through to Tuesday, we'll see here, I actually did a few trades myself here. And just to highlight, the box here you can see in color is the start of the Euro session, so that's the session I like to trade, and the green is the New York session. So a series of red boxes here. So that means the price has made new highs over the previous 12 hours. So therefore you would enter some shorts. I entered only one here as I didn't catch these. I was just looking at something else and exited here. This was a spike from the UK news. It was very good data from the UK. And then I entered a couple of trades along the way and exited just there. So this gives you an idea of what to look for. The key element for me would be make sure you pick the correct pair. You want a pair that's not going to move too much, but neither do you want a pair that's going to absolutely crawl along. So you've got to have a mixture. And the only really recommendation I can make is you dive in, have a play, look at different pairs, and see how it looks. Any questions, just let me know.